what's up, everybody? It's your boy Orlando, aka King Smitty, and today we're going to be talking about how you can get paid every month from the stock market. So, by investing in stocks, we're going to look at a stock, and there's multiple stocks, but we're going to look at one stock in particular that's going to help you get paid every month. But before we do that, go ahead and hit that like and subscribe button. Make sure the bell is checked so you get notified whenever I drop the video or anything like that. And also, we're going to look at how my portfolio is doing before we do that year to date and compare it to the S&P 500. As you can see, I am up 75.04% year to date. I'm that blue line, and you can see that S&P 500 is that doo-doo green looking line, right? So in order to get paid every month consistently by the stock market, you're gonna have to do dividend plays. And you could definitely trade, day trade, swing trade, and if you're good enough, you can get paid every month from the stock market. But there's stocks that pays a monthly dividend that's almost a guaranteed paycheck every month, right? And then when a lot of people retire, once they made their millions in the stock market, they put their money in dividends, so that way they can have a consistent revenue coming in, so that way they can live off of these dividend plays, right? And the stock I want to talk about today is Main Street Capital Corporation, ticker symbol MAIN, currently sitting at $40.50, right? Main Street Capital Corporation is a business development company that specializes in equity capital to lower middle market companies. So they do handle specialized loans for smaller companies. They buy out loans from other organizations, and they have the hand in a lot of different financial management for the lower middle market companies, and that's how they make their money. Main Street Capital Corporation has been consistently beating revenues in the previously quarters. When it comes to earning per share, they have been beating them, not consistently, but they have been beating them. I think this time it was estimated they were going to get 1.02, and they hit 1.02 on the head, so there was no surprise there. There was no beating that one. It met it though, which is still good. We'd rather it meet it than it be underneath the expectations, because then stocks tend to react very negatively towards that. Plus, we're already in a pullback. I'm hoping this isn't like another bear market, just a little correction for the stock market right now. But for this stock is right now, like I said, $40.50. For each stock that you own, every month you would get 23 cents, right? So as you accumulate shares, the bigger your paycheck will be, obviously, right? So every month you're getting 23 cents per share. Every year per share you're getting $2.82, right? So as you consistently build that 23 cents ends up being 46 cents, and then it'll be 69 cents, and then as you keep going, the check gets bigger every month. Now we have to do our part, and we have to, of course, continually pay into that, so that way eventually we can get those good proceeds rather than just pennies on the dollar, right? And I have started my position in Maine. I've been talking about it for a long time, but it wasn't like $41, $42, $43. So I did wait for it to pull back a little bit. I bought it at 40, and anything under 40 I'm gonna continue to buy. Actually, with this stock, I probably just continue to buy no matter where the price is, because I could definitely see it in the long run continually to grow. So as that stock continues to grow, now I'm making money on the stock price rising, and I'm making money on the dividends, and then the dividend price probably rising as well, right? Because I do believe that they did just recently increase their dividend to 23 cents. I think it was like 22 cents previously. So if I can make money while the stock is going up, and I make the money with the dividend plays, with the dividend checks, then at that point, that's like not two streams of revenue, but I'm like double dipping in this stock in a sense, right? So you gotta look for those great opportunities to jump in. You don't want to jump in at the very high, and then the price of the stock drops down, because now you lost money on the stock price, and you're getting a little dividend. So now you're just like, that dividend is kind of making up for what you've been losing in the play so far. And I'm trying to avoid that. And what I do with my dividends is I drip. I direct reinvest my profits in a sense. So as I get paid from my dividend plays, it automatically goes back into that stock. So it won't be a full share right now, but I am working my way to having myself get paid from this stock $40 to $42 every month. So that way every month it's like I'm consistently buying a new share with dividends. I'm not coming out my pocket anymore with any money. It's just every month there's more money, more stocks being bought for me through my dividends. And then that way it'll grow at a lot faster rate instead of me spending my own money on there, which I probably will too, just to grow it a little bit faster. It'd be kind of self-efficient. That stock could be buying more stocks of itself. And I want to look at the chart really fast. And as you can see, the high was at 43. Like I said, you don't want to buy at 43. It drops to $40. Now you've lost $3 per share, and now you're trying to, get your money back through dividends and continue to average it down, which is nothing wrong with averaging down, of course. But I kind of waited for a good pullback for me to join in. I was really looking for 38, so I just kind of I bought a little position right now, and as it continues to drop, I will continue to fill. If it rises up, I'll continue to fill. But if it goes below 40, I'm gonna load up a little bit more heavier than I would at 42 right now. But either way, I'm gonna keep buying. But looking at this stock, you can see they have it in short term bearish, mid-term bearish, long-term bullish. So as long as it's bearish, I'm buying. If it's red, it's time to go shopping. Right? Because they say the stock market is like the only place where people aren't excited when things go on sale. When Jordans go on sale, people jump on them. TVs go on sale, people jump on them. Makeup go on sale, people jump on them. Laptops, tablets, Xbox, PlayStations, when they all go on sale, they jump on them. But when stocks go on sale, it's like, ooh, I don't want to lose no money. This is the same company that's been making money for years. For example, Apple. Apple's been making money. It has a pullback or a correction. It's like, oh, I don't want to lose no money on that. That's risky. Nothing's changed with their business plan. Apple's still selling iPhones, tablets, iMacs or Mac computers. They're working on an Apple car, iCar. They have the Apple TV. So nothing's changed with the core values of the stock. It's just on sale right now. So why would you not jump on it? And Apple, as well as Maine, pays a dividend. Now Apple's is a quarterly dividend, so you're getting paid every 3 months, whereas Maine, we're getting paid every month. But looking at this chart right here, Maine, you can see the high. I believe this is roughly like a 6-month chart, I believe. But it's a daily chart, but it goes back roughly about 6-7 months, right? And you can see that the high is roughly around $43. And I want you to look at it. You can see where I have this purple circle at on the chart. That is a excuse me. That is considered a bullish engulfing pattern, right? In a bullish engulfing pattern, let me pull this other picture up for you so you can see it. A bullish engulfing pattern is a 2-candle pattern reversal. It's a 2-candle reversal pattern, shall I say. The second candle completely engulfs the real body of the first one. So you can see it happens on like a downtrend. So the stock is going down. There's a red candle, and then the green candle is larger than the red candle. And as you can see on this picture, the red candle, you see it opens up high, it closes low. The next day or week or month, depending on what, or minute, depending on what chart you're looking at, the 2-minute chart, 5-minute chart, a 1-day chart, weekly chart, monthly chart, yearly chart, depending on which time frame you're looking at, the open will be at the bottom, of course, since this is a bullish candle. It opens at the bottom and it's going to close at the top. And you can see the bullish candle at the bottom, it opens at or lower than the previous candle, and then it closes above the previous candle's open. So that length of the bullish candle engulfs the previous red candle, right? And then going back to the chart, you can see that the second candle, that green candle, opened lower than the red candle, and it closed higher than that green candle. I mean higher than that previous red candle as well. So that's in a reversal pattern called the bullish engulfing. So I'm not saying that this stock is about to just skyrocket right now, but I could definitely see this going at least to the $41 range, $41, and then there's probably another pullback. Because as you can see, let me grab this pink. There's a line right there just marked in the pink. That's a top. That's a resistance level, roughly around $41.20. You can see it got there and it rejected. So I can see it going up to there in the short term, because this play isn't like a real volatile mover like Tesla is or Nvidia. It's really like a slow grind, a slow mover. So I can see it getting to there, then possibly meeting resistance. If it could break through there, then we could be good. The only thing though with this bullish engulfing pattern is I don't see the volume there. You can see where my blue circle is, the volume isn't there. You have the candle pattern, but I like to see the volume behind it. That volume behind it, if it would have been like a long green wick down there, then I have a better sense of comfortability that it could make a little run. So that's why I say I can see it going to $41, and that's why I don't see that's why I didn't say I could see it going to like 42, 43. Because it doesn't have that strong volume behind it. But that's the play, everybody. Ticker symbol MAIN, Main Street Capital Corporation. And that's the way that you can get paid every month in the stock market. There's other plays that can pay you every month, like Gain, ticker symbol GAIN, O Realty, ticker symbol O, which is a real estate investment company. And so there's more plays than just the ones I'm presenting you. There's money all over in the stock market, but this one is one that I'm going with right now. I like the chart pattern a little bit. I like its fundamentals. It's beating revenues. It's meeting or beating earnings per share. They're raising their revenues still. So as of the moment, I'm in it for Main. If anything changes, then I might have to reevaluate my game plan. For example, if Main starts to cut dividends, then I might have to reconsider my position in Maine. At that point, I might go over to GAIN or O, which are other monthly dividends. So, but at the same time, if I'm up like 20% on this play and it's been consistently moving, I have to, like I said, I have to reevaluate. I have to look at the stock at that point. But at this time, I'm catching this on sale. Dividends are being increased. Analyst has this as a strong buy right now. Some analysts has this going to like $41. It only like on like the low end $41, and on the high end they have it going to like $47 to $46, which is a good little bump for me. So we're gonna take a look at it, keep buying in it right now, get this monthly dividend pay going, and let me know what you're doing. Let me know if you have any dividends. I know some people, their whole trading philosophy or their whole trading, how can I say, plan is dividends. Like all of their plays are dividend plays. So that way, like they put money in, they get money out. So that way they might have like 2 or 3 checks a month, or like at least 2 checks a month. Get them a monthly play. Then they have rotational stocks. Like they might have Apple getting paid on these 3 months, Nike paying me these 3 months, Coca-Cola paying me these 3 months. So it's definitely a good game plan. A lot of people do. I'm more focused on the growth. I'm trying to grow my money fast, and once I grow my money, then I can put that money into dividend plays. But let me know, are you one of those who main game plan is to invest in dividend plays? And if so, what are your top dividend plays? Give me like 2 or 3 of them. Ones that you either invested in heavily or consider investing in. So that way maybe I can find something on my list, not for my main portfolio, but for my backup portfolio. Because I don't believe I have any. I had Ford, but I got rid of Ford to put in NVIDIA, which was very good growth play so far. So yeah, let me know what stocks you have, what dividend plays you have, and I appreciate y'all for rocking out with me so far. Here.